Are you dreaming of owning your first home but feeling overwhelmed by the financial hurdles? What if there were creative and less intimidating ways to make that dream a reality? From innovative loan programs to unconventional funding options, there's a solution for every aspiring homeowner. Join us as we explore 7 unique financing methods that could be your ticket to unlocking the doors to your very own home. Stick with us and discover how these options can turn your home buying dreams into a practical plan for success. Rent-to-own agreements. Imagine walking through the front door of your dream home and knowing it could one day truly be yours, all without the need for a traditional mortgage right away. Rent-to-own agreements make this scenario possible by blending the benefits of renting with the long-term goal of homeownership. Here's how it works. You rent a property for a specified period, and part of your monthly rent payment goes toward your future down payment. This means every month you live there, you're making progress toward owning the home, a win-win if you're saving or improving your credit. During the rental phase, you get the chance to lock in the purchase price of the property, which can be a significant advantage if real estate prices in the area are rising. Think of it as a built-in safety net against skyrocketing housing costs. Plus, living in the house gives you first-hand experience of the property and neighborhood, allowing you to confirm that it's the perfect fit for your needs before committing to buy. It's like trying on the shoes before making the purchase, only these shoes are your forever home. The process, however, comes with responsibilities that require careful negotiation. Many agreements involve an upfront option fee, a non-refundable payment that secures your right to buy the property at the end of the lease. This fee is often a percentage of the home's value and varies depending on the seller. To avoid surprises, it's crucial to read the fine print, understand your obligations, and clarify who's responsible for maintenance and repairs during the rental period. Pro tip: consult a real estate attorney to ensure everything is crystal clear. For anyone who dreams of homeownership but isn't quite ready to dive into a mortgage, rent-to-own agreements offer a flexible path forward. With planning, budgeting, and an understanding of the terms, you can transition seamlessly from tenant to homeowner. Imagine that moment when the house keys truly become yours. It's an incredible journey, and rent-to-own might just be the bridge you need to get there. Shared equity agreements. Have you ever wished someone could just chip in for your down payment? With shared equity agreements, that's precisely what happens. In this creative arrangement, an investor or government program contributes funds toward your down payment in exchange for a share of your property's future appreciation. It's like having a financial partner who helps you cross the homeownership finish line. One of the biggest perks is the way this arrangement reduces your financial burden. A larger down payment means you can secure a smaller mortgage, enjoy lower monthly payments, and possibly snag a better interest rate. This setup also allows you to consider higher value homes, which might have been out of reach otherwise. Think about it. With someone sharing the upfront costs, your dream home might be closer than you think. Government programs offering shared equity options are especially appealing to first-time buyers. These programs aim to make homeownership more accessible while ensuring fair terms for both parties. In most cases, the government's share in the home's appreciation is proportional to their initial investment, creating a partnership dynamic that benefits everyone. Selling the home? A percentage of the profit goes back to the investor or program, keeping the system sustainable for future buyers. Shared equity agreements are ideal if you're comfortable with the idea of shared gains in exchange for a smoother path to homeownership. Just be sure to thoroughly review the terms and understand your obligations. With the right mindset and a clear agreement, this innovative option can transform what seemed impossible into an exciting new chapter in your life. Crowdfunding your home purchase. Imagine your friends, family, and even online supporters coming together to help you buy your first home. That's the power of crowdfunding, and it's a game-changing option for first-time home buyers. By using real estate crowdfunding platforms, you can rally contributions toward your down payment and turn your dream into a shared reality. Crowdfunding has gained massive popularity, especially among younger buyers who are comfortable with tech and social sharing. Instead of traditional housewarming gifts, many buyers create campaigns where loved ones can contribute directly to their homeownership goals. Some people even offer fun incentives or perks to contributors, like naming a room after a generous donor or hosting a special thank you event at the new home. It's creative, personal, and a great way to involve your network in your milestone moment. While crowdfunding doesn't guarantee instant success, it does provide a meaningful way to bridge financial gaps. Transparent communication is key to a successful campaign. Be clear about your goals, timeline, and how the funds will be used. By building trust with your contributors, you can create a community-driven experience that feels as rewarding for them as it does for you. Crowdfunding your home purchase isn't just about raising money, it's about creating a shared story of perseverance and community support. Imagine walking into your new home knowing that it's the result of collective effort and generosity. It's not just a house, it's a celebration of everyone who believed in you and helped make it happen. Lease-Purchase Agreements. Picture having the keys to your dream home while taking your time to sort out the finances to officially buy it. That's the beauty of lease-purchase agreements. Unlike rent-to-own, lease-purchase agreements commit you to buying the property at the end of the lease term, making it an excellent choice for buyers confident in their ability to secure financing within a specific period. During the lease period, you're essentially living in your future home. This time allows you to save for the down payment, improve your credit score, and ensure you're financially ready for homeownership. It's like pressing the pause button on the mortgage process while still enjoying all the perks of living in your dream house. And the best part? You lock in the purchase price from the start, which can be a huge advantage in a rising market. These agreements often come with structured terms that outline responsibilities for both the tenant buyer and the seller. For example, you may be required to handle maintenance or other costs during the lease period. Reviewing these terms with a legal expert is crucial to ensure there are no surprises. Knowing exactly what's expected of you can make all the difference in navigating this agreement successfully. Lease purchase agreements are the perfect stepping stone for those determined to become homeowners but need a little more time to get there. With a clear plan and commitment to the terms, you can transition from renter to owner seamlessly. It's a path full of potential, offering flexibility today and security for tomorrow. Community land trusts. Imagine a way to own a home without the crushing price tag of land. Sounds pretty amazing, right? That's exactly what community land trusts offer. They're a unique, affordable homeownership option that separates the cost of land from the cost of the house. Here's how it works. A non-profit organization purchases and owns the land, and you buy the house on it. Without the land cost, your dream of owning a home suddenly becomes much more realistic. It's like unlocking the secret door to affordable housing, and it's all about keeping that door open for future homeowners too. The magic of community land trusts lies in their commitment to long-term affordability. When you buy a home through a trust, you're not just investing in your future, you're also ensuring that the property stays affordable for others. This is achieved through an agreement that caps the resale price of your home. Yes, you'll still earn equity, but it's shared equity, meaning a portion of the appreciation goes back to the trust. This cycle creates a ripple effect of affordability, giving more people access to stable housing. Think of it as paying it forward in the most impactful way possible. What's even better is the built-in support system. These trusts aren't just about transactions, they're about community. Many offer resources like financial counseling to help you manage your mortgage, maintenance guidance to keep your home in great shape, and even workshops to help you navigate the complexities of homeownership. You're not just buying a house, you're stepping into a network of people who want to see you succeed. It's like having a homeownership cheerleading squad, something we could all use, right? Now let's talk about what makes this option even more enticing. By choosing a community land trust, you're not only making a smart financial decision but also becoming part of a movement that's tackling the housing crisis head-on. Sure, there are guidelines like agreeing to a resale price formula and certain property use restrictions, but when you weigh those conditions against the benefits, affordable homeownership, shared equity, and ongoing support, it's clear this isn't just about buying a home. It's about joining a community and creating a sustainable future for everyone involved. Seller financing. What if the seller of your dream home could also act as your lender? That's the unique concept behind seller financing, sometimes called owner financing. In this arrangement, instead of going through a traditional bank, you work directly with the seller to purchase the property. This setup can offer more flexibility, faster processes, and creative solutions tailored to your needs, especially if you're finding it tough to secure a traditional mortgage. Here's how it typically works. You and the seller agree on a purchase price, down payment, interest rate, and repayment schedule. These terms are outlined in a promissory note, a legally binding agreement that details the loan specifics. You make monthly payments directly to the seller, just like you would with a bank. It's a straightforward process that cuts out the middleman, often making the experience smoother and more personalized for both parties. Seller financing is particularly appealing to buyers with unique financial situations, like those with less than perfect credit or self-employed individuals who might struggle with traditional loan requirements. Since the terms are negotiated directly with the seller, there's room to craft an agreement that works for everyone. Sellers also benefit as they can often sell their property faster and earn interest on the loan, creating a win-win situation. While seller financing is an exciting option, it's crucial to approach it with care. Both you and the seller should consult legal professionals to ensure the agreement is fair and protects everyone involved. Details like who handles property taxes, maintenance responsibilities, and insurance must be clearly defined. With the right safeguards in place, seller financing can be a powerful tool to make homeownership accessible and achievable, turning your dream of owning a home into reality. Bridge loans. Have you ever found yourself dreaming about a new home while still tied to your current one? Bridge loans can be your lifeline in this situation. They're short-term loans designed to help you bridge the financial gap between selling your current home and buying your next one. With this option, you can move forward with purchasing your dream home without waiting for your old home to sell, giving you the flexibility and freedom to act quickly in a competitive market. Here's how a bridge loan works. The lender provides you with a loan based on the equity in your current home. This loan can be used as a down payment for your new home, allowing you to secure it without the stress of timing both transactions perfectly. The beauty of a bridge loan is that it's temporary, usually lasting 6 months to a year, giving you enough time to sell your old home while still moving forward with your new purchase. One of the biggest advantages of bridge loans is the convenience they offer. Imagine avoiding the hassle of juggling moving dates, temporary housing, or storage fees. With a bridge loan, you can move seamlessly from one home to the next, saving time and reducing the stress of coordinating 2 major transactions. However, this convenience comes with a cost. Bridge loans often have higher interest rates and fees than traditional loans. That's why it's essential to carefully calculate whether this option aligns with your financial goals. Bridge loans are best for homeowners who are confident their current home will sell quickly. If you're in a hot market and expect a fast sale, a bridge loan can provide the cash flow you need without locking you into a long-term commitment. But remember, preparation is key. Work closely with your lender to understand all the terms and conditions and have a solid plan for selling your home. With the right strategy, a bridge loan can be the key to unlocking your next chapter in homeownership. And that wraps up our deep dive into these innovative financing options for first-time homebuyers. Whether you're considering bridge loans, community land trusts, or seller financing, the journey to homeownership has never been more customizable or exciting. If you found this video helpful, be sure to give it a like, share it with friends, and hit that subscribe button. Don't forget to tap the bell icon so you never miss an update from us. Until next time, here's to turning your homeownership dreams into reality.